The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman here. This is October 29th, a miserable day here in the Boston area, and it's bound to get worse. And, let's just have white lighting for all those down towards the southern area of from Boston down, maybe north even, because this is quite serious stuff. When you've got a sea level that basically rises, and you still have to get high tide at the same time as the storm is about to go through, that is not good. And in a book that I've quoted very often, if I can actually find the title, it's called The Wave by Susan Casey. She talks about, if I could just find, I wasn't going to even do that. Just this very second, I decided that's exactly appropriate. I'm just trying to find it. It's in Alaska somewhere. Is that the Quarters Bank? Somewhere in Alaska, there's this very narrow path for water to go through, and it goes into the bay, comes down from the mountain. But when the tide comes in, I can't remember if it's every quarter or it comes in periodically, and as it comes in, it squeezes the water through this channel, and it builds up. Now, I don't want to be quoting the wrong size, but they said that there were certain points of reference on the side walls of the mountain, and it looked like the wave itself could go up just for a moment, but it could actually go up to 1,000 feet. So with that in mind, what we're looking at is up the Hudson River. If you've got the same sort of thing where you've got a narrow space between the banks, and you've got the tide, and you've got the current, and you've got the storm itself, I think that's the biggest concern right now. So let's just hope that all of this misses. It doesn't. You don't get this magic of everything coming together. You want this one to be absolutely uncoming together. You do not want to see a coincidence factor of everything working at one. So with that in mind, let's look at the markets as I see it right now, and I'm going to jump to the weekly chart. I'll do the daily, and I'm doing it in the black background. Reason being, having gone through all the different processes, my thinking right now is that I visually see the charts very nicely in the black, with a black background. At the same time, the white when I can. I know that a lot of people have said to me, "Oh, this is great! Now finally we can start printing out your charts." And I don't mind that at all, because I think it's very important that you understand what I'm talking about. I do have proprietary indicators, but as far as the charts are concerned, a chart is a chart. So what I'm going to do right now, and I had a couple of requests, but I just wanted to talk about this for a moment. You see this trend line from 10,404 in the Dow. That was on the week of the 7th of October. Well, that trend line comes right into 12,035 low of the week of the 8th of June. Oh, that was October of 2011. Then June of 2012, that low, you can draw a straight line. Now, what I love to do, and I do this and I show it in my Master Trader series, one of which is coming up this is a level 1. This is your basic one for those people who already think they're getting a little bit of a feel for the ChapmanWave. They'd like to learn more. They're fascinated by how many, not dozens, not hundreds, but by now it must be thousands of times showing these charts at TFNN for over 8 years. They've seen at least the peak D could be a very serious top. It can go to E, but from that area, from D, that's where you've got to be careful. And so these are the techniques that I teach December the 6th and 7th. That's a Thursday and Friday in December. and all day webinar. It's going to be live, and we're really looking forward to it. So you can see that trend line, I love to take the outer wick, if it's possible, to draw the first of a trend line. And after that, you might want to smooth it out. You might go into the body of the candle. That's not the important thing. The important thing is, in this particular instance, it's showing clearly that if this week, and it could have been today, because in my opening call, my Traders Corner, that's part of my opening call, we are looking at, we have a lot of shorts. In fact, this is the most number of shorts we've had without any longs for a long side. Not that I wouldn't be looking at longs, because there are some stocks that are holding really well. Do you remember bifurcated market, meaning don't be afraid to go short if the charts are not looking good. Don't be afraid to stay long if the charts are holding well, acting well, and all you have to do is, organize your stops so that you don't turn a profit into a loss. Now, look at this. You've got a trend line that shows you that if the Dow 12,935 area is hit, even intra-week, that'll be the first time since the uptrend officially began, confirmed, I should say, in the trend line. Not the uptrend itself started way earlier, because the stochastic back in January of 2012 was already positive. But no, this is from the support at 12,035 back in the week of the 8th of June. So if this trend line breaks for the first time, we're looking at the potential on a weekly chart with the MACD and stochastic pulling back for me to put a down arrow instead of the plus sign. And once the down arrow is in, it says, yes, you could have a retracement to the upside. Yeah, it can happen. It's not a big deal in terms of the waveform. But you've got to be careful, because if the stochastic and MACD continue to slide with the price, then it says you've got to be careful, because that whole area of the 12,000, I'd say 12,550 to 12,450, that's going to be critical support. Now, why do I talk about that? Talking about a monthly chart is because in my work with these peaks and troughs, this is the first time that we've gotten to a leg F that could be a potential leg B. I'd better just put this in. I've got it in the white background charts. I'm just going to put it back in here. So let me just show you what I'm talking about. I don't want to make it complicated. I don't want the eyes to glaze over. I'm just putting this in to say that in the ChapmanWave, there's an alternate count that can happen if certain conditions are met. And that is if the stochastic and the MACD are still acting very well, even though there's been a bit of a pullback. But I can tell you this, that if the Dow closes on the monthly chart below 12,035, that's 1,000 points away. So it seems almost impossible. I'm just telling you that would negate entirely the chance of going to a leg C. But if in November there is a lower high below 13,661.87, that would be a negative if the Dow even just closes below, say, 12,700. But if it holds in this area, it becomes a high-level consolidation. I can get an alternate count, and I'll explain what's so important about that. What's important about it is that the S&P has made a potential peak F/B top in the monthly chart, because 1474.51 was the high in September. October is 1470.96. It sounds like it's a big deal, a couple of points. Hey, in the ChapmanWave, 1 penny makes the difference. And the stochastic is lower now than it was before. And the MACD is still holding very well, but it's not showing weakness, but it's not really showing power. It's just showing steadiness. And why do I make a big deal about this? Is because the last peak of significance was peak E at 1576 in the October of 2007. And in the Dow, it was 14,198. Where is that? Back in October 2007, there, peak F top with a doji high. So that's why I'm making a big deal about this. Now, there's something else that's even more important. When you're looking at all these different aspects, I talk about the three bears. That is VIXI, Bondi, and Dolly. And those three bears, the volatility index did rally last week and rally quite well, quite strongly from the 1330 low that was made on August the 17th. Well, all of a sudden, the 200-period exponential moving average at 18.50 is starting to hug that. It's only made a peak C with a chance that it should make a peak D above 19.65. I can only tell you this, that in my work, you can do all the studies you want. You can do all the technical analysis you want. But on the basis of the Chapman wave, if the volatility index starts to hang out in the 20s, the low 20s, anything above 20, selling pressure will be maintained. So I'm just going to make it as simple as that. That's a proprietary indicator, but that's my analysis of the volatility index. I have other technical indicators that I could be using. I'm trying to make it as simple as possible. The Dow will come under, and S&P and the NASDAQ will come under pressure if the volatility index starts to trade above 19.65. Is it? Yep, 19.65 goes into the 20s and holds. If it's just a one-day spike, well, it means that we can go down a little bit, we could rally back. But if it holds there for an entire week, making a strong leg B, an even stronger leg B in the weekly chart, be careful. Now, that says on the opposite side that if the volatility index is almost done and it starts to slide underneath 17.20, I would actually say under 16.82, 16.80, all of a sudden you're going to see buying pressure come back. Okay, we got our first caller. We got Fish in Riverview, Florida. Hi, Fish. How are you?
Hey, Basil. Good. How about yourself?
Very well, thank you.
Good luck with the storm.
Thank you very much. I believe
it all works out good.
Yeah, I hope so too. I believe we kind of in for wind more than anything else. It is raining, but wow, there are some parts there in the New Jersey, Manhattan area that I hope everything works out well.
Me too. Hey, I have a 401k question for you.
Yes.
I'm all in cash, except I have about 25% in a REIT, which is the only REIT option that I have in my 401k. Okay. So I'm all in cash right now. Tom's talking about a bounce here. And my question is, are you in that camp? And would you, I can transfer my 401k from cash into the market for a couple of days. Would you do something like that here or not?
I'm going to make a suggestion only because of the way you phrase your particular question. This is the way I would look at it if I was you. Number one is in your overall portfolio. I'm talking about, if you own any property or whatever else you own, I would consider two things. At this, we'll have to wait because I hear a break. Let me think it through, because it's not that you can put money in or take it out of the market. You know that we've had some 200-point days which say that if you put it in or out, you're 2 points down. So let me talk about that. I'll be right back with Fish in Riverview, Florida, and we'll talk about a potential bounce.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back, and we're talking to Fish down in Riverview, Florida, and we're talking about a potential bounce. Is it a tradable bounce? And that's a great question. And hi, Fish, you still there?
Yes.
Okay, great. Now, let me just, I don't know if you can see the charts, but if you look at tiger.mobi, you'll be able to see my charts. It might be a little small, but because sometimes I have them, I use the full page and sometimes use part of the page. But most importantly, what I want you to show you is this. And you can go back to the archives. My show is archived on channel 11. I'm showing a chart of the S&P, and the S&P is clearly, there's just no other way to talk about it, and to say that the S&P right now is clearly in the monthly chart within the upper confines of a very well-placed uptrend. I have another chart that I've done. It's the same chart, except I did something else besides the fact that I've got colored candles in. I've drawn it with a down channel that goes to what I call a left side price side time match, and it says, if it starts to break to the downside, and certainly if the S&P on a monthly basis starts to dip into the 13,053 level right now, 1,353, right now it's at 1411, then it's starting to challenge the lower boundary, but not the lower what I call an uptrack major support, which goes all the way down to about 1220, 1250, well, it depends when it is, 1240. So if you were to play a bounce, then I would also do two things. I would consider that, as I said, as we were going to a break, what if you get in, and it's a fabulous move, it goes up 300 points, but you have to put in to sell, and you can't put it in until either the day's end or it might not go through until the next day. What do you do if it drops 200 points? So if you think that there's a potential for a 7 to a 10% up move, I'd have absolutely no hesitation. But I have some questions going into the election next week because things are changing constantly. The fact that there's now this incredible storm on a politically expedient basis, there's no way that President Obama could have booked the storm and said, wow, as we go into the storm, no matter where my placement is, as we go into the election, no matter where the placement is, I want the biggest storm the United States has had in decades, because it's perfect for a president to stand up there and talk about what, give, just throw money wherever it is, because it's fantastic. On the other hand, you'd never know the outcome. It might be very mild overall. So the market is going to, I think, fluctuate according to a little bit more than I was experiencing. What I was looking at was a chance to experience some uptrend, some downtrend, with certain stocks looking really poor and a couple of stocks actually looking quite good. Now, when you put that into the pie, all of a sudden we might find that if the market opens, say, Wednesday, that because of the disappearance of Romney in the news headlines, he actually loses some momentum. I mean, I'm not talking politics. I'm talking about the implication of the market to the perception of seeing someone like a president on TV quite a bit, which I'm sure is going to happen over the next couple of days. So that means that there might be a perception that, Bernanke will be staying. Well, we don't even know if he's going to step down or not, but the market might perceive that. But that would just be transitory. So I would not be, because it's your IRA and because it's a mutual fund. If you said to me on Monday, on the day that the market opens, if there's quite a nice bounce pre-market, the futures are up nicely, would I recommend that you take a trade? I'd say, you know what? Because of my cycle work and everything, I've got some kind of a bounce coming in right now. I'll even show the charts. Let's see. I'll have to take this one away. You'll be able to see. This is what I showed my subscribers this morning to my opening call. There's a declining wedge formation in a time lapse in the 120-minute chart of the Dow diamonds from the left side to the right side. It's almost ready for a bounce. I have to call it a bounce, and it could go from 130.80 to, say it goes to 133. Is that something you want to play? And that's my question to you. So if you were going to just buy the Dow diamonds, I would say to you, if everything's good, even though it's your IRA, take a small amount of money, you could put it in, but you must have a stop. And I'd say think about what kind of a stop you would like. A 1.5% to me would be fine, because if a rally fails and it goes down by 100 points in the Dow, you don't want to be part of it. So I'm going to answer you to say that I don't. My perception right now is that I don't think you're going to get the upside potential in this market. You might get it Wednesday a week. So, okay. So that's what I'm going to say, but I'm going to talk a little bit more about it after the break. So thank you for calling. I'll discuss it more, but I'm saying kind of step away for now. I'll be back after the break.
Thanks, Basil.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour. Monday through Friday, I'm here, 11 o'clock till noon, 877-927-6648. And I just want to, there's a quick note here that I was sent, and I'm pleased about that because we were supposed to start the Great Panther Silver giveaway today, but hey, it's not an appropriate time. So because the markets are closed, we're going to be pushing it back a few days, so we'll begin the Great Panther Silver giveaway whatever day the market opens back up, and we'll last for 3 full days. That's Great Panther giveaway, Silver giveaway, where we'll be giving away at least a half an ounce of silver each hour that we're on the air, 9 o'clock till 6 p.m. to a lucky winner. That's amazing. Every hour. Just keep in mind, you can still sign up. Please do sign up, and you can sign up right down the front page of TFNN. So, yeah, it's going to be going on, but obviously it would be silly to do it and start it today. So as soon as the market opens, that's the day that we'll be on full 3 days in succession. Now, I want to go back to Fisher's call about whether you should put some IRA money in. I'm of the opinion that some money, you should have one little foot in the market at some point. You have it because you said to me you've got a REIT. So that's good. So I would, if you are able, within the confines of what you're able to trade, if you're able to do something that is as close as possible, approximates say the Dow or the S&P or the DIA, the SPY or the Qs for a bounce, potential bounce, I'd probably avoid that. I'd stay with the Dow because if the market's going to bounce, it'll probably include the Dow or the Spider. So the DIA, I think, would be the best. That's the one that seems to me that is fine-tuned right now to have a bounce. I don't know how many points it'll be, but you want something where you aren't going to put in a sell and they'll only expedite that the next day when you've already lost some part of your percentage. You want to be able to get out the moment you want to get out. That's what I would recommend about. And only if on Wednesday or whatever day it is that we open, if the futures are open by about 10:05, 10:10, there is some nice follow through and the market's moving up because there are a lot of stocks that are oversold on a short-term basis. Let's go to our next caller. We've got Ari in Arcadia. Hi, Ari. How are you? Arcadia, Florida, I should say. Hi, Ari.
Well. In July, I sold some January puts on RGLD.
Okay, very good.
67.5. It was a 67.5 strike. No matter what happens, I cannot get hurt on that move.
What, RGLD?
Royal Gold, RGLD.
And you got them what price?
It was in the dollars, $3. I don't know.
The what you bought was in the $3. Okay, and it's trading right now at 84.85. So you bought them.
I sold them.
You sold them. So at this particular point, you're already in the money. It's how you deal with the next step. Now, folks, we're looking at RGLD, which is at 85.61, up 76 cents after hours, in hours. I don't know whether I'm going to go with the price that it closed at on Friday, 84.65. Now, what's really important about this chart is it has a potential in the daily chart to have what we call the Eiffel Tower. It goes straight up and then it comes straight down. It looks like a capital A. This one's a little bit fat. It's a little bit wide on either side. The way I'm looking at it, and I'm sure you've also looked at it, the 85.34 area from back on the 12th of September, that is quite strong support, but it's failing to hold the support. And if you go to, whoops, this is the wrong chart. If you go to the 120-minute chart, I'm always a little afraid when the MACD's been running up and the stochastic's trying to give you a buy signal and the price refuses to do anything. Here's what I'm looking at. If there is a bounce at any point, it could be a bounce to the 200-period exponential moving average at 88.88, and right now it's at 85.61. So that's 3 points. But more importantly, what I'm looking at is that the monthly chart has a vicious downturn, both in the MACD and the stochastic, but the MACD is just this week will be starting to cross. They closed a little bit negative on Friday. It is the month, and I've got it in leg E/B. At first, I thought it had to be a B because of the power of the move, but in fact, it's gone from the 57 level all the way to a high of 100.84 back in the week of the 5th of October. That is a huge move. That's about a 90% move. So I believe that this pullback that it's going through right now will probably, based on the monthly chart, try to hit 80.38. If it bounces beforehand, your question, the question that I suspect you'd like to know is, if it bounces, what would constitute a bounce of significance that says it's going to hold and go to even higher highs? Or would it just be a retracement failure pattern that just bounces up and has to come back, has to, by the basis of the technicals that are failing in the daily and the weekly, to come back? Well, now we go to the monthly chart, and I'm sure you've looked at it. The MACD and stochastic are very strong in the monthly chart. The stochastic's at 87%, and the histogram is quite good on the MACD, but it is holding very well. But it is just the MACD fast-moving average. For those of you looking at my charts, this particular chart right here, the right one, which is always a monthly, that is saying that the MACD is just about to bump into some kind of resistance. Resistance doesn't mean to say that it can drop sharply, but it does say that the upside could be fairly limited. So here's this is my answer to you. I believe, I've said this before, that I have sell signals in the gold contract, silver contract, the GLD, plus the contracts themselves, December contracts, and the SLV, which is silver, the iShares. From what I'm looking at, upside is very limited, and the downside doesn't look like it's a sudden steep decline, but just lower highs and lower lows for a little while longer. So RGLD, which is Royal Gold Inc., I think could have a bit of a balance here. My suspicion is that if everything, as I was saying to Fish a few moments ago, if on Wednesday the futures are up a little bit, there's a perception that the status quo is going to remain based on the elections coming up, the market could actually bounce quite sharply. That would normally you'd expect to see the euro, gold, and the futures and the stock market kind of go in concert together. I would consider it, at least for now, a counter-trend rally. And all I can say is based on my work, I think that my target would be towards the 81 to 78 area in the RGLD, based on everything I'm looking at. If this rally goes towards 86.90 and then closes above it, that's not very far, it's just $1.30, then the level that I'd be watching would be 88.19 to 88.88. That's going to be pretty key for me. So the question is, do you want to take some profit and you can come right back into the trade? And I will tell you this, that if when the market opens, within an hour of the market opening, that's 9:30 on either Tuesday or Wednesday, if gold is rallying quite strongly, then you can see the bounce. But if gold is poor and the futures are poor, are acting very poorly, my target would be that there's not much more than a $1.50 bounce, and then RGLD will make a lower low. But MACD, the stochastics at 3.49 in the daily chart, that is very weak. There's just no testosterone. There's no power there whatsoever. So that's the way I'm looking at it. And as I say, the 120-minute chart says 88 is the very strong resistance. That's 3 points, and I don't have to tell you that when you are short a call, or if you have any options at all, it'll be about just over a 3.5% move in the stock. That can drag the premium right out of the call. So I would recommend that you start to take a little bit off, and you can always put that back. But I think you're right, based on the weekly chart, that there will be more of a pullback, and then there could be a bounce, a decent bounce at Royal Gold. But right now, I've got the 80.38 9-period exponential moving average as a potential target in the next couple of weeks. Hope that helps you.
I appreciate it.
Thank you very much for calling, Ari. Always good to hear from you. Let's go to Frank in West Palm Beach. We got the Florida callers today. Hi, Frank. How are you?
Right, because it's storming way up there, and so we're clear as a bell.
That's great. I'm pleased that you're clear, because very often we're the ones that are worrying about you down south.
You're where? Based where?
I'm in Newton, Massachusetts, about 6 miles or so from Boston itself, 6-7 miles.
Yeah, we're sunshiny and everything here.
Yeah, I can. It's the wind is coming up really heavy now. It's if this is the way it's going to be, that's fine. But if it gets really bad, if it's really bad for us, it could be very, very bad for the New York area.
I'm on Netflix today.
Netflix, this is a very nice bounce that it has. Folks, we're talking about Netflix. It's trading at 65.54 was the close on Friday.
No, 69.
Wrong. I've got to get used to my charts. It's not the red one, it's the black one.
I have a December put on it, 65 put.
Oh. Okay. Let me just explain what I'm looking at in Netflix, because it's very interesting. I once had Netflix, but I'm just terrible. I mean, I used to have library books. I live about a mile from the library, and I would have library books that were always overdue. So there are some of us that are real sluggish about sending the stuff back, or the DVDs and all that. And there are others that are just fabulous. Now, you can also stream it, but I'm hearing from people that it isn't always a successful stream. It seems to me that Netflix has a niche. They made a couple of mistakes, and they've lost that. They've really lost a tremendous force. They've lost a lot of goodwill as well. I don't know how they're going to get it back. But as a product, seems to me, it was theirs to lose, because they were the best in the field. So now this is what I'm looking at, forgetting about the fundamentals, which are going to be really up and down. It's going to be earnings report to earnings report. I would be in your camp to say that even if there was a rally, there's a good chance that it's going to come back. So it's at 69.58 right now. There's a good chance that it's going to come back and test this whole area between 69 and probably not as low as 54 just yet, but 69 to maybe 62.
Right.
Now, how do you do this? Because you're already in the trade. I don't want to make it complex by saying, you could negate it by different ways. I'm going to make my suggestion, and then I'm going to ask you if you want to do this, and it's up to you. But we have a fabulous show on a Tuesday, Victor Jones Options Hour. This would be absolutely the perfect call for Victor because he's terrific. This is his field. He's an absolute specialist. What I can tell you is that from my eye, I believe that Netflix is going to try in the shorter term to try to tackle the 74.23 high of the 8th of October. Now, the big problem is this. There was a huge gap down from 77.81, the low of the 24th of July, to the very next day, 66.80. Now there's something else with Netflix. It's kind of got a habit now of these terrible gaps. Got another gap back from the 23rd of April at 105 round number high, 101.79 low. Next day, kaplop, 90 round number high. So
you have to understand one thing, Basil, is they live on lies. The other lie was that Morgan Stanley upgraded it and it shot up and it came back down. Now the other lie was last week that what's his name wanted to get involved with it. Microsoft.
Oh, right.
It lives on a lie to lie. That's when it zooms up and down.
And that's why I agree with you that I think from everything I'm looking at, there's a pattern that I call the Eiffel Tower in the monthly chart. It went straight up. It went from a low of 1790 in October of 2008 all the way to 304 to peak E in the ChapmanWave, and then it plugged. Now, I make a big point on my show, and I've done it for a long time, to say the majority of charts go up and down in the same left side to right side time sequence, and they go up in the same time sequence. They are very orderly going up, very orderly coming down, except when there's a bad news or a good news event that spirals the stock
or a
higher.
lie.
Or a lie, and this was proved. Well, it was also the game plan changed completely, and they made a terrible mistake. So 304.79 back in July of 2011, it plunged to 64 round number low. No, 62.37 low of November of 2000.
That's when the CEO came and apologized on TV. Remember that?
Very late.
Yeah.
And it was almost like he apologized reluctantly, but he had to apologize.
He apologized for being arrogant and everything else.
Right. So now there's a 200-period exponential moving average at 50.30 and 50. Let's call it 51 in the 200-period exponential moving average. But I'm going to tell you this: maybe I'll do it tomorrow if I have a chance. I'm going to show 1932, the Dow 1932 to 1937.38. And then I'm going to show the chart from March of 2009 at the low, the Dow 6500's low, to the 100% gain. So you cannot listen to news. You've got to look at the chart pattern. It's really important. And I believe you're correct in your analysis of the chart that it says, you call it a lie, but I'm just saying the chart itself says that upside should be limited, downside what is to come. But I'm going to advise you, if you can hold off, you might be able to add to this if it even gets to the 73 to 75 area.
All right.
So let's leave it there. And you know what I'm going to say? If on Wednesday we open, let's look at it together and see what happens on Wednesday.
All right. Should I hold?
Well, you can't do anything until then, right?
No, I'm talking about...
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. I just wanted to go through this again. I believe that we've still got Frank waiting. Frank, you're still there, right? Frank, just say hi if you're there.
Yeah, I'm here.
Okay, here. Good. One of the things I'm looking at, you remember what I said to you, what you've got to do is, regardless of what we're thinking, you want to look at the chart formation. And if you look at the chart formation, there's been a fabulous base that's been built in Netflix, going from the low of 62.90 back in November, the week of the 25th of November of 2011, to all the recent lows. That was the low retest of 60.70, a successful retest. It bounced a little bit, came back down, went lower to 52.81, then it went down to 53.15 the week of the 7th of September, and then most recently it went to 53.05.
Right.
But what that does, it creates a base of support and a reference number for money managers and fund managers who say, hey, wait a minute, every time it's gone into the 53s, ever since it was in that 60 area, now it's gone to 50, it's started to try, it's tried to rally. It hasn't been a great rally, but it's been a rally nevertheless. There's a big difference. This is the first time that I'm seeing the MACD and the stochastic actually rising to points where they hadn't been since back in April. And that's the reason why I said to you, if I was looking out to December, I could agree with you. I'm going to ask you to handle your trade really well. And the reason is this. And the reason why I'd say to you just before we went to the break is that you might want to be adding to it. My thinking here is two things. If you are just a little bit out of the money, in other words, if it's going against you just a little bit, I probably would say to you that while I would be looking to the downside,
right,
based on the monthly chart having held so many times the 200-period exponential moving average, giving it time to kind of build up a little bit of upside momentum.
Right.
If on Tuesday or Wednesday when the market opens, if this gets to above the strike price of 70, which that's kind of the area that it's been having a tough time with, if it goes above 70, I'm thinking that you might lighten up. I don't know how many puts you've got, but
I'll tell you what I've got. I've got 5 December 12.65 puts. That's 5 in the money, and then I've got 6 December 12.55 out of the money, 3 out of the money.
Okay. So my thinking is this, and I'm still going to recommend that if Victor does his show tomorrow, that you actually ask him. But this is my thinking: I would lighten up if there is a pop on when we open, and it holds above 70.30 by the end of the day. Even if the market's going to turn around after that, and I'll explain why. There's a build-up of energy to the bottom that it looks like it needs one more pop, at least one more pop-up to the upside to kind of get rid of that energy. And that's why I'm saying to you that if it goes above 74.23, that's when I'd probably be looking more towards the downside. So in this particular instance, you want to see on Tuesday or Wednesday when the market opens that you want to see 68.20 to 67.70 as quick as possible. If it does that, I'm comfortable with your position. But if it starts to rally, I would say lighten up. You can come back. You're going to have plenty of time if we're looking at December to add to those. But
so you're saying lighten up meaning sell?
I would sell at least maybe 2. I wouldn't be heavy into this because I think you're going to get a better opportunity if it does rally and holds into the close.
I lose $100 if I sell all 5.
Really? You know, that makes me even more say stick to a plan. The plan would say, my plan would be that if it closes, the market is generally higher on Tuesday or Wednesday, and Netflix is up a point or point and a half. I would I'd exit and I would be putting back. But if it holds lower underneath 69, stay in your position. And we can also talk Wednesday.
Again. I'll hold again.
No, we're done. I'm done with the show. Larry Pesavento back. So I'm welcoming Larry. Thanks so much for calling. And I'll be back tomorrow. So thanks for calling, Frank.
All right.
So Larry Pesavento will be back, folks.